Hey guys, Mike here. So today I'm going to talk about stocks that could be getting ready to explode going into the rest of the month of November, into December, and maybe into 2022. I'm going to tell you what kind of stocks I'm talking about, why, show you a couple analysts from some big financial institutions that just talked about this in the last 24 to 48 hours, as well as an article that came out today about it. And the reason why might actually surprise you because kind of surprised me, but we'll go into in depth on that. And then I'll give you a little extra bonus play that you need to be on the lookout for because it's absolutely made up of these type of stocks and is on the move right now. And so, just hit the like and subscribe button if you're getting out of this right down there below. Really appreciate it. And let's go ahead and get into what kind of stocks we're talking about here. And so this is an article that came out from our friends at the Daily Upside this morning. And it says, analysts forecast higher earnings growth on the Russell 2000, which is small cap companies, anywhere ranging from 300 million to 2 billion, than the S&P 500 in coming quarters. And what they're projecting here is earnings from companies on the Russell 2000 index are projected to grow 475% in the third quarter from last year, according to the data from Redfinitiv. Compare that to 42% increase for large cap S&P 500 earnings. And looking at the Russell 2000 chart here, when the NASDAQ went down in February, that major sell-off that lasted 3 months, the Russell 2000 just started trading in this channel and has been trading there for the rest of the year. But finally, last week, it actually broke out of this channel for the first time. And this is a big deal because the Russell 2000 has been trading in this channel for 9 months, okay, while the SPY and the QQQ keep running up and the Dow and the Russell's just trading that channel. And finally this breakout is what's getting people's attention, because when that happens you'll usually start to see a nice run on any index that does this. And so what I want to do though is look in the past history over the last 20 years to see, have we seen this, kind of chart pattern before where it traded in a channel and what happened? And I found 2 different instances, and I'm telling you, the patterns are almost identical and almost like eerily identical. So check this out, because this could put a roadmap of where we're actually heading next. And so I had to go back to 2004 to find the first instance of this, and it traded in this channel starting when? February. And when did it break out of the channel? Shockingly, I think it was November 8th. And then what happened? It went on a run for 56 days and went up 7% into 2022. And then I had to fast forward all the way to 2019 to find this channel. Doesn't this look familiar? And it ran when? From February to November. And then look at the days. 56 days exactly it ran up 6.66% into the beginning of the next year, which is January. And of course, some people say history repeats itself. Some say it rhymes. Whichever one you want to go with. The fact that both those before this ran up exactly 56 days before selling off could be a coincidence. I don't believe in coincidences. But, obviously, if this happens this time, 3 times makes a pattern, we shall see. But what has got the Russell 2000 obviously breaking out of this channel is earnings. As you can see, we'll plug right here. This started running up back October 22nd, had a nice earnings call. So it's up 27% in the last 23 days. And you have Shake Shack, really nice earnings, popped way up to like 40% up, I believe it was, before selling off, still up 25% over the last 2 weeks. Then you got Goodyear Tire, nice earnings. Over the last 2 weeks, it's rolled up 18%. That's after a sell-off, after earnings. Then we have RUN, Run. This one started in October, and after earnings, it kind of ran down and ran back up, but you're looking around 42% over the last 40 days. Then you got ANF. Here's another one from October 27th to November 15th, 19 days, up 21%. And then you got SKT sitting here for 16 days, ran up 23%. Big pop after earnings. It was up like 35% right after earnings there. And so it's pretty obvious to tell that those stocks have been on a massive tear and woken up after selling off for many, many months. And so now I'm going to show you what B of A has to say and UBS has to say about this, and pay close attention to why they think this run is actually happening, or what small caps are really good for, because it is kind of surprising, and then we'll talk about it afterwards.
We're bullish on the small cap segment of the market, even though we've had a more cautious view on the S&P 500. And one of the things that we look at is valuation, and valuation doesn't tend to tell you a lot about what's going to happen near term, but we found that where multiples are today can tell you a lot about what happens to returns over the next 10 years. So if you're a long-term investor right now, the multiples that stocks are trading at today are telling you that the S&P 500 could actually see negative annualized price returns over the next 10 years. And, that's one reason that, dividends are so important today. But for small caps, which are trading at a big relative discount to large caps right now, our models are actually suggesting that you could see high single-digit annualized price returns for small caps over the next decade. And, this is coming after a long period of underperformance for small caps. They lag the market from, 2013 until 2020, and usually these cycles can often last about a decade. So this could be a good longer-term period for smaller stocks.
Are they a good inflation protection hedge?
So historically, small caps have generally tended to do well in inflationary periods. They did well in the late 60s environment of inflation. This time around, if inflation gets really high, you have tended to see a more detrimental effect on multiples. But look, we've been in an environment for a long time of low growth, low wages. A lot of big cap tech and other areas doing well. Now we're seeing the reverse of that. There's been a focus on, small businesses, small business sentiment, wages are rising. We have seen a lot of these companies have pricing power. So we do think a lot of the more domestically oriented companies are in a good position right now. The small caps this earnings season have continued to surprise to the upside. And even though supply chain has been something a lot of them have been mentioning highly on earnings calls, pricing and as a proxy for pricing power has been something that has really, ticked up a lot. And we were even seeing more mentions for small than for large year over year of pricing on earnings calls.
Kind of power through higher inflation over the medium term. Then I think you want to be long things like the commodity sectors within U.S. equity markets, potentially small cap equities, or some exposure to potential metals and mining and things of that nature. If you're just generally bullish, then I just think you want exposure to two parts of the market that tend to benefit from that higher inflation. And again, that would be sort of commodities, capital goods, small cap, and more cyclical parts of the market, I guess.
And I just want to show you real quick before I get into it, but this is what the ETFs actually broke down into and by percentage. So healthcare is their leading one. Financial number 2, industrial is 3, and you can see the rest of them going down there into smaller percentages right there. And so, I can see the argument on both sides as far as the inflation bet when it comes to small caps, but I actually pulled up the inflation data and seen when it was spiking. It's usually always after a crash for sure, or something like the dot-com bubble, the 08 crash, and all that stuff. But the truth was, the Russell went up, but so did everything else because we were coming out of a crash or something. So this one's a little different for sure. And plus, we're at like 30-year highs now. And so going back to the 90s. So, this inflation is much higher and being caused for different reasons than the other two times I looked at. So yeah, maybe that's what it is. I would think more to look at actually what the Russell is in and how it's weighted, because it has 2,000 companies in the Russell 2000. And so, it's much more spread out versus the S&P and NASDAQ, which are heavily weighted towards basically 6 companies. Okay, the FANG stocks plus Microsoft make up over 40% on the NASDAQ, over 24% on the S&P, I believe it is, if not more by now. And so, those companies, just 6 companies just bring down those indexes versus the Russell. There's no one company that's going to bring them down. And so, they're very spread out. Plus, like I showed you that chart, healthcare is supposed to be a high performing area from here on out, especially going into 2022. People think financials because they think the Fed obviously going to raise interest rates. They could do well. Real estate's supposed to do very well over the next 12 months, and so a lot of rich people are sticking their money there. They tend to perform well in a high inflation environments. And there's a couple of things that are in there weighted in their index that should do well in inflation. So that's more or less what I'm kind of looking at. when it comes to that. But, you know, it's really going to depend on the earnings. Each company is individual. So if you're going to individual stocks on this, you know, make sure you watch the earnings calls, that they're doing well. As some of them will not do well, but the one that showed you obviously had good earnings, and so they popped on it. And we got to watch, make sure they stay above that trend line. But in the other two instances I showed you, once they broke above it, you know, you get a nice little run there before you get the sell off. And so, you know, we'll see about that. The other one is, you know, let me get your thoughts down in the comments too about that. But I know I've been holding some small cap stocks. They've been rallying lately, and I've been happy about that. So hopefully they'll continue to run. And so the other one I was going to tell you about is a side note. Some of these stocks trade on the Russell 2000, but for the most part, they're just small or micro cap stocks, actually. But one that broke out recently here is MSOS, and this is an ETF for MJ stocks, you can see. And the majority of MJ stocks are small cap or micro cap stocks. But you can see it broke above that trend line right there in November, recently here in the last week. And, you know, had a nice little pop, nice little run down as well, and so it's coming back a little bit. And so of course you can pull this up and you'll see it has Trulieve and a lot of Green Thumb, I believe is another big one in there, which you can pull them if you like to go individual stocks. But the funny thing about this one is, if you pull up the TLT, which is the 20-year bond treasury ETF, then you'll see they almost go hand in hand, which is crazy. I don't know why, but just a fun fact. If you look back in February when the TLT broke down, this ETF broke down right with it, major sell-off. And then just last week, I believe it was, or last week, the TLT started coming back up and recovered a little bit. Well, what happened? This recovered as well. So I still haven't figured out the correlation between the two, but on the charts, there's definitely like a direct correlation. And so because as soon as the TLT started to turn back over again, head back down, so did this ETF. And so, you know, if you want to have some fun, just pull this one up, hit plus, and then put TLT in there and start lining them up, and you'll see there's a direct correlation. But if people think a TLT should be recovering soon, if that happens, then this one will as well. And plus, it's already broke that long downward trend line right there, and that's usually a bullish sign. So, you know, we'll have to see. And you can see the volume is just massive over the last like 7 days in this ETF. So, you know, just a little bonus at the end if you look into that one, or just looking at individual stocks that's in his top 10 holdings if you're looking for bigger gains and stuff. But it definitely seems, you know, a lot of people are calling for rotation to small cap stocks probably a month or two ago. It did not happen, and so it seems to be happening. You know, obviously I'm not talking about retail investors, us. I'm talking about the institutions. Could be rotating over. You know, again, that's not guaranteed. Nothing's guaranteed. We'll see. You've seen how fast these indexes will start off massively green and they will roll over. Boom. You know, quicker than you make a chicken sandwich. I mean, I literally went to make lunch one day. We're in the green. Takes me 5 minutes. I come back and you just see these massive red bars on the SPY or the QQQ, and it's like, what in the world just happened? The whole market just shifts, right? And so, you know, we'll see what happens. At least I want to bring that to you. But let me know, you know, your thoughts in the comments on that. Do you think this is finally the rotation that a lot of us have been waiting on, or do you think we're just going to get faked out again? You know, and let me know what you think about the patterns before this as well that I showed you on those breakouts, okay? So hit the like and subscribe button if you get anything out of this, guys, and don't forget to hit that link down there in the bottom. Sign up for a BlockFi account to earn 9% on your stable coins, 9.5% on your Tether, and 4 to 5% on your other cryptocurrency, as well as earn the 1.5% back on Bitcoin for every purchase you make on that credit card, guys. I will see you later.